everyone. Happy Friday. Thank you for joining us on our call today. With me, I have one of our reverse mortgage expert loan originators, Robert Verga, and our CEO, Pavan Agarwal. Pavan, do you want to introduce yourself to the group?
Hello, everybody. I am Pavan, and I love loans.
Enough said. There we go. Robert, do you want to say hello to all the great folks out there streaming today?
Hi, I'm Robert Verga. I love loans also.
All right. Well, we all have that in common. So now that we've got that out of the way, well, you're all here on the call because you must also love loans, but specifically, you want to learn about reverse mortgage. What are they? Who are they for? Maybe even how to originate them. Reverse can seem intimidating if you haven't done one, or maybe if you just haven't done a lot, but really it doesn't have to be. And you're going to hear why today. There was a time when originating a reverse loan should have been intimidating. It was complicated, difficult. People kind of tried to stay away from them, right? But when you have the right tools, originating a reverse mortgage is a breeze.
To that, I would add that Robert started with the firm long before the firm started reverse mortgage. And he actually watched us develop the product, develop the tech. And we closed our first reverse mortgage all the way back in 2004. Seems like 4 lifetimes ago. In this business, you measure lifetimes by cycles, by rate cycles. So that's at least 4 lifetimes, maybe 10. I don't know. Way in which rates move around these days. So
yeah, I worked on the original test cases for the reverse mortgage that we used for their approval servicing.
That is right. So needless to say, Robert is an expert on reverse mortgages. He has originated many reverses in his career, along with many forwards and non-QMs and everything else in between. So you are in very good hands with Robert. He is truly an expert. And the objective today is to get you all comfortable enough with the product, get you all to understand what we have and how it works so that you too can go and originate a reverse mortgage with confidence. I know when you do something new, it's a little scary and you don't want to mess up in front of a borrower and potentially lose a borrower and lose a referral partner. But that's why you need a lender like us behind you. Because we will be there for you 24/7, just like as the screen's saying, 24/7. And we're always, we love loans and we love you always. So, and how we actually accomplish that and how you can be in front of a customer without being anxious and without feeling lost for answers. That's always the hard part when you're selling a new product, is you don't want to be stumped, but we have the technology to make sure that you don't get stumped. Right? And and beyond the technology, we have Robert. Right? So Robert's always here to help you as well. So go ahead, Angel. Why don't you go ahead and talk a little bit about the tech?
I might say that after you've done a couple reverse mortgages, you might find them easier than forward mortgages. So once you get the confidence and get a couple on your belt, you'll probably find out they're maybe even easier for you to do.
Yeah, so we will show you those tools today of how we make that reverse mortgage origination so easy. Just a little bit of background on SunWest's experience with reverse. Like Pavan said, we started doing reverse back in 2004. We actually designed the securitization of reverse with Ginnie Mae. The tools, again, you're going to see here today make that origination so simple, so quick. And we actually provide reverse mortgage services to some of the country's largest banks. So we're very well versed, very experienced in getting reverse mortgages originated. Like Pavan said, you're in good hands. So we're going to start from the beginning. What is a reverse mortgage? So a reverse mortgage is a loan for that the borrower can get money basically out of the equity of their home. So the lender actually pays the borrower in this sort of a loan. And they actually don't have to make any payments on that loan. So we're going to get more into how that works and how you qualify. How do you explain in layman's terms your elevator speech on what a reverse mortgage is?
Basically, a reverse mortgage is your ability to use the equity in your property for financial goals. So either to fix up the property, income for the property, take cash out to do other things. So it's basically the loan that's going to let you access the equity and have no house payment. So it frees up more money so you can live comfortably. Basically is how I would put it. It's usually, you're correct, tax-free. You're accessing your own funds. So it's just another way that you can take money out of your account and not have to have a house.
Can be a great option for your clients that are seniors, 62 years and older. Not just talking to your clients, but another great referral source for the reverse mortgage, or you'll also see it called a HECM. So that's what that HECM stands for, is estate planners, financial planners, because they're working with those clients that are 62 years or older. They know their financial situation, if they would benefit from a reverse mortgage. So building those relationships help with your reverse mortgage business as well. So the requirements, not everyone can get a reverse mortgage. So you do have to be over 62 years old. The reverse mortgage does have to be on the primary residence. And as we'll see here when we get into amounts, they will need a significant amount of equity in order to get a reverse mortgage. They can't be delinquent on any federal debt. And they do also have to have the financial resources to be able to pay for, ongoing expenses, property charges. So while they don't have to make a monthly payment on a reverse mortgage as they would with a forward mortgage, we still need to make sure that they're able to pay for the regular expenses and keeping up the property. They also do have to participate in HUD counseling. We'll get into a little bit more of the details on the HUD counseling a little bit later, but that is something that they have to complete before we can do the reverse mortgage.
I would add one thing, residence, the 1 to 4 units. So if you own a duplex, triplex, fourplex and live in one of them, you can still do a reverse mortgage. It doesn't just have to be a single family residence.
Oh, that's great information. Definitely. Here's an example chart of when we talk about residual income, what they need to have in order to qualify. So we know that they have the funds to cover their ongoing living expenses. So it does depend on where in the United States they reside. It also depends on their family size, their household size. So you can get an idea for the various family sizes. For example, here in the Midwest, family size of 1, they'd need to have $529 residual income per month. And this is how you do the calculation. So you take all their income from any sources, you subtract monthly property charges, also any other monthly expenses that they have, and then that is their residual income. So that's one of those first things you need to look at when you're qualifying someone for a reverse mortgage. We mentioned HUD counseling. So if you remember nothing else about HUD counseling, remember this: you may not recommend a counseling agency. We'll talk a little bit later about where you can find resources. You can provide your client with a list of counseling agencies, but you may not recommend a counseling agency. And Robert, correct me if I'm wrong, but HUD actually calls borrowers and asks this question, right?
That is correct. They will follow up to make sure you were not the one that gave them the counseling agency to use.
Yes, so you can provide them with the list. There's an information packet that generates as soon as you initiate that reverse mortgage calculation on one of our websites we'll show you here shortly. You can give them that information packet, tells them a little bit about reverse mortgage, and also gives them that list of counselors available in their area, but you cannot recommend one. In California, for those of you in California, that counseling does have to be completed before the application is submitted. So that's an important time frame to remember as well in California. There is a cost to the HUD counseling. Typically, it is going to be paid by the borrower up front. However, if they're getting their reverse mortgage because of financial hardships, most of these agencies will work with them if they just say they're experiencing a financial hardship, and the agencies usually will work with them to have that fee paid after closing.
I've never had a borrower decline to ask for a hardship, so I'd say 99% of the time you can get it rolled into closing.
That's good to know. And Robert, in your experience, about how long does the HUD counseling take for clients?
Well, the first thing is they have to set up the appointment depending on the availability. Usually they can get that done within a week. The actual phone conversation, depending on how many questions, maybe a half hour.
Okay, so pretty quick once they're in, which is great to know.
Yes. Request the counselor also when get the counseling certificate. They can send the certificate with you and the loan officers. You'll know exactly when it was completed.
Now, there are a few different options when you're looking at a reverse mortgage. So it's not just one product, one size fits all. You can actually use a HECM, a reverse mortgage, for a purchase. So if you have clients who maybe, you know, their children have moved out, but they still got this big old house, they're wanting to downsize, they could actually purchase that downsized property with a reverse mortgage. Now, of course, they are going to have to make a pretty substantial down payment because remember, a reverse mortgage is based on the equity that you have in your home. But that would allow them to purchase this new home and not have a monthly mortgage payment. So here, and this is for illustrative purposes only, a little disclaimer, but here's an example. So it all depends on, you know, the borrower's age, the purchase price, how much they would have to put down. But again, for that example, they're downsizing. Maybe they have around a $500,000 house and they're downsizing to a $350,000 house. So when they sell their property, they're going to have, assuming they had equity in that home, a pretty good chunk of change that they can then put down as part of that HECM for purchase. If they're able to put down that required down payment, again, they don't have a monthly payment on that mortgage. Robert, have you had any clients take advantage of the HECM for purchase?
I've done quite a few of them, and actually the hardest part about this is explaining how it works to the selling agent and the sellers. So that's getting them to explain and get on board is the hard part. The actual reverse mortgage purchase is pretty simple. You just do the calculation like you example. It gives you the amount they're going to have to bring in. Usually 9 times out of 10, they're selling one house and purchasing another one, but it moves the same way as a regular reverse mortgage.
Another option is a HECM refinance. Now, this is referring to if the client already has a reverse mortgage, already has a HECM, we can refinance that into a new reverse mortgage. Now, there are some tests that the situation has to pass in order to make this possible, because of course we want to make sure we're looking out for the borrower. So there has to be, you know, a certain percentage of increase of funds that are going to be available to the borrower, things like that. So if you have a borrower with a current HECM and you want to know would refinancing their HECM benefit them, go to usemorgan.com. You're already here. So if you already know the situation, just type it in the field below. Give Morgan the scenario, all the details you have on their HECM, their current situation, and say, would this pass the tests to refinance the HECM? And Morgan will be able to tell you. Are there certain scenarios, Robert, that you found tend to be really beneficial to refinance a HECM?
Yeah, there's a lot of the HECMs where they had higher margins, and if you can lower the margin, they can free up a lot more benefits, either with cash out or additional money if they're taking income. So you got to really look at the margin when you're determining a HECM to HECM refinance. But yeah, when the margins go down, there's a great opportunity for the borrower to refinance and get some additional funds benefits out of it.
And can you explain, for those of us who are not familiar with margins on a reverse, can you explain a little bit about that?
So on a reverse mortgage that's an adjustable, your rate and your benefits are determined by the margin and the index. And so when the rates are high and the borrower is taking higher margins, then their benefits are going to be much lower because it's based on an average rate. And so the rates are much higher over the lifetime of the loan. There's not as many benefits or cash out or income to the borrower. When the rates go down and the margins go down and the rates are lower, now you can go back in there and give them a lower rate based on their life expectancy. It's not going to eat up as much equity, and that equity now can go back to the borrower. So on a reverse mortgage that's an adjustable, there's a big advantage to the borrower if you can lower their monthly margin and lower their expected interest rate. That frees up more income and a lot more benefits to the borrower.
Another option for a reverse mortgage is a line of credit. So it doesn't always have to be a lump sum, or a specific payment plan where they're getting a certain amount of money to them every month. They can take out a HECM line of credit where they just have those funds available to them. They don't necessarily have to use it or ever have to use it. And what's really cool about the HECM line of credit is it's guaranteed to grow, which is a huge selling point and very interesting way of understanding a HECM line of credit and how it works. Robert, can you explain a little bit about how the HECM line of credit is guaranteed to grow? I'll put this little calculation on the screen here.
So your line of credit, when you go and get your original reverse mortgage, if you decide not to take all the funds out or you only want part of it, the rest of it will go into that line of credit, which you can access. That line of credit will then increase over the life of the loan. So if you don't use it, your line of credit amount has gone up, but you're not paying any interest on that line of credit. I believe it has a growth rate of 5%, but I'm not 100% positive on that one. On that line of credit. So it's a great benefit where whether the value of your house goes up or down, your line of credit is not going to be reduced. So whatever line of credit you start with, you continue to have, plus the growth rate will be added. So it's a great benefit. You're not going to lose your line of credit. You always have it there, no matter what the value of the home is. You can access it at any time. And if you didn't access it, you're not going to make any payment. When you close out the reverse mortgage, then that is just credited back. So it's probably the best line of credit there is out there because it will never be changed and it has a growth rate on it.
Yeah, so excellent security for the borrower to have, even if they don't need the funds right now, just to have that line of credit available to them. And like Robert's saying, it's going to grow if they're not using it. So here's a quick illustration here. We've got one person. Now we're considering both of them have an original line of credit at $100,000. Person A uses it. They use 100% of their line of credit, and that is what is due back once either they pass away, the property goes to their heirs, or they move out, sell their property. The value of that line of credit. Now person B over here just got it to have it in case of emergencies, never used it. Over 10 years, because that principal limit went up to $200,000, now this person has access to that $200,000. So person A used their whole line of credit, which was $100,000. So that is what they received from that line of credit. Whereas person B, who never used it, now the principal limit has doubled and they have access to a $200,000 line of credit. Pretty cool. So you can also think of a HECM line of credit as a built-in annuity. And this is an important thing to know when you are talking to clients about reverse mortgage, you know, what they plan on using the money for, because HUD actually prohibits using the HECM to purchase an annuity. So if that's what they're looking for, here's an opportunity to talk to them about how a HECM line of credit works. So when you're talking to clients, here are some key indicators that it may be a good idea to talk to them about a reverse mortgage. They're over the age of 62. They're on a fixed income. They're interested in home improvement, possibly. If they have a high DTI. Another interesting thing about the reverse mortgage is the DTI is not something that's considered. Because remember, we're not counting on them making monthly payments. We want to make sure that they have the ability and the finances to pay for their ongoing living expenses, but they're not expected to make a monthly payment. So DTI is actually not a factor in a reverse mortgage. If they were unable to get traditional financing because of a higher DTI, reverse mortgage is often a good option. They need to supplement their retirement income. And they do need to be physically capable of maintaining the home. So that is another one of the requirements. Is there anything else that you've noticed, Robert, that has been a key indicator for you that, ooh, this might be a good prospect for a reverse?
It's usually the income. The DTI is going to be your number one thing. They don't qualify for your traditional mortgage. And so that's where the reverse mortgage really comes in handy. Much easier to qualify. They can get that money out and not have to worry about that payment. But most of these people will not have the income to qualify for your traditional forward mortgage.
How much they can get out of a reverse mortgage, there's a lot of considerations that go into that calculation. The principal limit factor, the property's value, how much equity they have in the property, what is the current interest rate. As Robert was talking about, setting the margins has to do with the interest rate currently. And this is an FHA product. At SunWest, we do an FHA reverse mortgage. So the FHA limits stand with the reverse as well. So with all of these factors considered, the limit is $970,800 as of this time today. Principal limiting factor, here's the current chart. It has to do with their age. So someone of the age of 62, their principal limiting factor is in the 30s, whereas a 90-year-old would have 61% of that limit. Another qualification consideration is tax insurance set aside. So looking at what their current obligations are, their projected future financial obligations, how long the lender will pay, it's going to be determined by age and life expectancy. So HUD actually has charts out there that will help you calculate based on the borrower's age, how they're going to look at life expectancy. For maximum initial disbursement, during the first 12 months, so the first disbursement is going to come at closing, and their next disbursement would have to be at least 12 months later. So for their first disbursement, it's going to be whichever is higher between 60% of their principal limit, or any mandatory obligations plus 10% of the principal limit. So lots of little math involved here, and this is where I always recommend just go to Morgan. Hey Morgan, here's the scenario. What would the maximum initial disbursement be? Great, I can go tell my borrower. So, a lot of times, as we said at the beginning of the call, reverse mortgage can seem intimidating if you haven't done it before. As we just talked about, just looking at some of the qualifications, there's some equations involved. The reverse product itself, how it works, it can be intimidating when you're first getting started with it. And what a lot of originators end up doing is referring out their reverse mortgage. And you're essentially doing what this guy right here is doing. So you don't have to give away your commissions. There's no required certification. Any licensed originator can do it. And it is very simple if you have the right tools. We've been doing reverse mortgage for a long time. We dedicate a lot of our time, money, and energy into our technology and developing and continuing to enhance our technology. And that is where you get the tools that make origination very simple. Like Robert said at the beginning of the call, you might find it's actually even easier than originating a forward mortgage. So 2 of the major tools you want to know about when originating or considering a reverse mortgage with one of your clients is Morgan. I've already mentioned a few times here, I would just ask Morgan. So definitely Morgan, and simpleheckmcalculator.com. So anyone can go to simpleheckmcalculator.com and calculate out what some options might look like with very little information about your borrower's scenario. This is what the website looks like. So you just put in your borrower's date of birth, where the property is, what the estimated appraised value is, any liens that they have. You can add a co-borrower. With very little information entered, now we have the breakdown of what each of these 3 programs that SunWest offers may look like for your borrower. The other tool I mentioned, of course, is Morgan. So if today is your first time accessing Morgan to watch this webinar, let me introduce you formally here. So Morgan is our virtual AI assistant. Morgan can give you the confidence to talk to clients about reverse mortgage without that feeling of, I don't know enough. What if they ask me something that I don't know? Because Morgan can answer any of those questions for you. If your borrower asks you a question, you can say, that's a great question. Let me find out really quick. 24 hours a day, 7 days a week. And the beautiful thing about Morgan is SunWest stands behind anything that Morgan tells you. So you can feel confident in that moment. You get the answer, you can tell your borrower. Anytime we do calls like this, a ton of really good reverse mortgage questions come up. And generally what I do, I jot them down and then I go over to Morgan, quiz her. So here's a great example. I went to Morgan, said, we've got some questions. My client's worried about what will happen to the property upon his death. This is a pretty
number one question.
What's that?
That's the number one question you're going to get.
Yeah, number one question. And I think there's also a lot of misunderstanding out there about there.
Yes, absolutely.
So here Morgan says the title remains in the borrower's name. So there's a misconception out there that the lender, in this case SunWest, now owns the property because it's a reverse mortgage, and that's not the case. The title, however it's currently held, whether it's in a trust, whether it's just in the borrower's name, whether there's two people on the title, it's going to remain the same. SunWest is just the servicer. So Robert, can you speak a little bit about what does happen when the borrower on a reverse mortgage passes away?
Yes, it would be the same thing as what happens if you pass away and you had a regular forward mortgage. So it would go to your heirs, either through your will or trust, whoever you decided you wanted the property to go to. We give 6 months for them to settle the estate, and they can ask for another 6 months extension. So technically they have 1 year to settle the estate of the borrower of a reverse mortgage. So the borrower is going to determine what happens to the property. So whoever they want to have the property is going to get the property. That person then can make the decision. Do I want to keep it? Great. I'll refinance out of a reverse mortgage if I don't qualify for one into a forward mortgage and keep the property. 2, I could sell the property and take whatever difference between the payoff and what it's worth and keep my profits. Or technically, they could actually not take the property at all and give it back to SunWest, but that's very, very rare cases. So the borrower is in complete control of what happens to the property, just like they're in complete control before they got a reverse mortgage. It's up to them how they want the property to be divided among their heirs or families.
And that's a really important thing to understand. So it's no different really than if the borrower had a forward mortgage. Say they had an outstanding balance of $100,000 on a forward mortgage, they pass away, their heirs now would own the property, but they would either have to pay off or refinance that $100,000, right? Same thing with a reverse. If there was a $100,000 reverse loan on the property, whoever inherited that property, as Robert said, all in all, they have about 12 months to settle, either refinance into a forward or reverse if they qualify for one, or pay cash if they have it. Robert, what tips do you have about these conversations, that, where to have them, how long they last, how to set them up?
I find that if the reverse mortgage borrower has children or family members, they usually have the most questions. If you can get everyone on the same call at the same time, you'll have yourself a much easier time than having to explain it to the borrower and have the borrower try to explain it to family members. So I always try to get everybody who's going to be involved, everyone who's going to have some questions. Not only do I answer them, but I have them on the same call with the counselor. And that seems to make everything move much smoother. So most of the time, it's the family members that have more questions than the actual borrowers. Like your original question there, they're concerned on what's going to happen to the house once their parents pass away. I would say a reverse mortgage conversation probably is going to be a good 20 to 30 minutes. Going over calculation, running the numbers, explaining how it works, answering all, and figure that you're going to have a couple follow-up phone calls. But definitely, if you get their children or other family members on that same call, explain it to everyone at the same time, it makes it much easier.
That is a great tip. Probably just saved a lot of people a lot of time there. So what to expect in that sales cycle? The majority of the time is spent with your client preparing.
Here's another instance where you want to get the family involved and it'll speed things up. Most of your older reverse mortgage customers don't have access to a scanner. They have problem getting you the documents. If they have a family member that can help you, who can scan those or send you the documents that we're going to need, you're going to speed this up quite a bit. So I always go over the documents with the borrower. I give them an estimate of about 60 days, but if we can speed this up, if you have a family member that maybe can help us, step in, help you scan documents, get documents to us. So yes, you depending on which direction you go, if the borrower has no help, it's going to be a longer process. You can get somebody involved to help them who's familiar with computers. You can really speed up the process on a reverse mortgage.
So to submit your reverse with SunWest, start out with simple HECM calculator. Put in that basic information, look at the breakdown of the 3 different products to have that initial conversation. Once you create the file, you'll get that disclosure package that you can provide to your borrower. It has a list of HUD counselors in your borrower's area. They complete that counseling. Very important in California that that's done before you submit the application. You submit the application, and then SunWest is going to take it to close. So Robert, you said earlier, folks might find originating a reverse is easier than originating a forward.
I find that a reverse mortgage is easier probably to originate than a forward mortgage because it's pretty simple and straightforward. You're going to put in this information on the calculator. It's basically going to tell you whether this is going to work or not work. There's no really in between there. So based on the age, the value, and the payoff, it's going to give you what your options are. And from there, you're just going to collect basic incomes. Most of these people are retired. I don't have a lot of income documents I have to track down. And send the package out to the borrower. So I personally think once you get comfortable using the HECM calculator, putting in all the information, you'll probably find this easier to do than a forward mortgage. There's actually less documents you have to get for the borrower.
And go out to simplehecmcalculator.com and just play with it.
Yeah, I would definitely go in there, play with the ages, play with the margins, play with the rate. You're going to see the big difference between borrowers' ages and the rates on how much equity, how much cash they can get out. Play with that, and you'll get pretty good at it. When a borrower calls you up and based on their age, what they tell you they owe, and what the value of the home is, you can almost be pretty good at guessing what is going to work and not going to work if you play with the calculator long enough.
So common objections to be prepared for. As Robert mentioned, that first one we looked at when we introduced using Morgan for these, that's going to be your number one question or objection is what happens when I pass away or sell the home, move. So we already got that one out of the way. But anything that your borrower asks you, you can just go to Morgan and get that warranted answer. So we'll look at a few more common objections. This question is asking, is the borrower responsible to pay taxes, insurance when they have a HECM? And here Morgan told me it depends is the answer. In some cases, impounds are going to be required, and then SunWest would pay the expenses out of an escrow account. So just like we would with a forward, we would pay them out of escrow as they become due. Other cases, depending on the borrower's situation, they can have the choice if they want to pay the taxes, insurance themselves, or if they want to have them impounded. Next question on the screen here, is there any penalty or waiting period to pay off the loan, or any restrictions on when they can sell the property? And no, so none of our HECM products have a penalty or waiting period. Here I asked, well, if a second appraisal is required, who's going to pay? So the second appraisal can be charged to the borrower unless they're in California. California, we have all of those special rules for reverse. So she says, well, it's allowed by HUD. California state law prevents charging the borrower for the same property twice in 12 months. So that's special in California. So any other questions that you have that have come up on this call or that come up later, come out to the same website, use morgan.com, ask your questions. If you have questions now, you can enter them in the field right now and get your answers. Robert, any last tips, words of wisdom?
I would just say don't be scared of it. I mean, play with the calculator. After a couple of them, speaking with the borrower, you'll get comfortable with it and not have any issues. It's pretty simple. It's based on three things, age, property value, what they owe on the property. And from there, you just run it through the calculator or through Morgan, and it's going to tell you whether this is something that's going to proceed to the next step. And you have great resources through Morgan to ask any questions. So I would say just go out there and jump in, run the calculator and move forward. You'll find that it's much easier to do than you probably think.
Thank you. And so all the information we talked about today, this is the same both for our retail and for our wholesale partners. If you are viewing this webinar just to check us out and you're interested in becoming a partner either on the retail or the wholesale side, just let Morgan know. If you have more questions about SunWest, Morgan can answer those too. If you would like to get on the phone and talk to someone about your questions, let Morgan know, and we will be in touch with you over the phone or email, whichever you prefer. So with that, I appreciate you all taking some time out of your Friday to join us, learn more about reverse mortgage. Robert, thank you so much for joining us. Thanks everyone for joining.
All right, thank you.